Think about the last game you opened on your phone just to kill 5 minutes. Maybe it was a puzzle, a battle pass, or something your friend kept bothering you to try. At the Cursor Stocks, this is the doorway into Gameverse Interactive. Not charts first, but the everyday habit of people paying attention to games. Gameverse Interactive Corp is trying to enter the stock market under the ticker GVSE, the short nickname investors type in to find it. The central question is simple. What would have to be true for this IPO to make sense? Because with this one, the deal terms are clearer than the full business story. An IPO is the moment a private company starts selling pieces of itself on the stock market. For a beginner, the useful way to see it is this. A company is asking strangers to become part owners. In return, investors ask, what am I really buying, and how much am I paying for it? The company name points us toward interactive gaming, but we should be careful. A fun market doesn't automatically make a good stock. Games can be huge, but they can also be hit-driven, expensive to make, and brutally competitive. So the story isn't just people like games. The story is whether Gameverse can turn attention into dependable money. Here are the hard deal numbers. Gameverse is listed as offering 5 million shares, which are tiny ownership pieces of the company, and the target raise is about $20 million. That's not a giant IPO. It's more like a smaller company asking public investors for enough fuel to prove the next stage. The planned exchange is NASDAQ, and the offer date attached to the deal is June 8, 2026, but the status is still pending. That matters because beginners often think an IPO date means everything is locked. It doesn't. Until pricing is final, the story can still shift. If you divide the target raise by the share count, the math points to about $4 per share. But that's not the same as saying the final offer price is set. It's just a useful coffee table calculation. If the company wants $20 million from 5 million shares, each share has to carry about $4 of the raise. The missing number is just as important as the visible one. A market cap is what the whole company is worth on the stock market, and here that value hasn't been set, so investors don't yet have the full price tag. They have a proposed raise, a share count, and a lot of judgment to do. Why would a company go public at all? Usually, it wants money to grow, more visibility, and sometimes a path for early backers to eventually sell. For Gameverse, the beginner takeaway is clean. The company is asking the public market to fund a next chapter before investors can see every chapter in the book. Now bring it back to that 5-minute phone game. Every tap is attention, and attention is the scarce thing every entertainment company wants. If Gameverse can turn players into repeat users and repeat users into revenue, the IPO starts to make more sense. If it can't, a public ticker doesn't fix the business. The broader gaming backdrop is real. Industry research put the global games market at about $197 billion in 2025, growing around 7.5% year over year, with PC gaming expected around $43 billion. That doesn't prove Gameverse will win, but it explains why investors keep looking at gaming companies in the first place. In the United States, the habit is massive too. Recent industry research says about 212.3 million Americans aged 5 to 90 play games at least 1 hour a week, up about 7.2 million from 2025. That's the bull case's first ingredient. The audience isn't niche anymore. It's normal life. But big markets can fool you. A crowded mall doesn't mean every shop makes money. Gaming has giant platforms, famous studios, and endless free alternatives, fighting for the same evening on your couch. So the question returns. What would have to be true for this IPO to make sense? Gameverse needs a reason players come back. The competitive set is not gentle. Public investors already know names tied to games, platforms, consoles, and interactive entertainment. Some own massive audiences, some own beloved franchises, and some own the devices people play on. For a smaller IPO, that means the pitch has to be sharper than gaming is growing. This is where revenue and profit matter. Revenue is the money coming in before expenses. Profit is what's left after the bills are paid. A game company can have excitement and still lose money if development, marketing, servers, and user acquisition cost too much. For Gameverse, investors should want that financial picture fast. The first reality check is information. With a pending deal, no final price, and no set valuation, a beginner shouldn't pretend certainty. That's not being negative. It's being disciplined. When you don't know the price tag for the whole company, you can't yet say whether the stock is cheap, expensive, or somewhere in between. This is the part investors will argue about. A $20 million raise sounds small next to the global gaming market, but size alone doesn't make it attractive. The real tension is whether the company can show enough traction to deserve public money. Until valuation is set, the smartest word is patience. Also, watch who gets the IPO money. If shares are newly issued, the money mostly goes into the business. If insiders are selling, more cash may go to existing holders. And if there's a lockup, that's a waiting period when early insiders usually can't sell yet. Those details can change how the IPO feels. After it lists, the watch list is simple. First, does Gameverse explain exactly what it sells and who pays? Second, does revenue grow without losses getting out of hand? Third, does management give investors a clear reason this company can survive in a crowded gaming world? Those signals matter more than launch day noise. So the balanced read is this. The dream is easy to understand because games are a huge everyday habit and public markets like growth stories. The doubt is just as easy to understand because the final price, valuation, and deeper business proof still need to show up. No need to panic. Just know what question you're asking. The next time you open a game for 5 minutes, you'll know how to read a stock story hiding behind that habit. What does it sell? Who pays? What could go right? And what could break? Follow the cursor stocks for more IPO stories in plain English. This video is for information and education only, not financial advice.